Hello everyone, we're going to talk about two events that are moving global economic estimates and markets. The first one is the COVID-19 vaccine announced by Pfizer with more than 90% of effectiveness. The other one is the US elections. Let's start with the vaccine. The vaccine does certainly put a limit on the negative downside that many of us were analyzing for the global economy. Why? Because it reduces the risk of new lockdowns, it reduces the impact on the services sector, and it basically puts a brake on the most negative outlook that could come up from an acceleration of the spread of the disease and new lockdowns, etc. So the worst scenario is at least mitigated. Okay. The second point is about the medium-term outlook. The medium-term outlook is not changed. Why? Because the global consensus, analysts, investment banks, international bodies, everybody already had in their estimates the end of the pandemic in 2021 and 2022. So either because there was going to be one or numerous vaccines, the estimates for global growth, jobs and productivity growth that we had seen in the last couple of months already had discounted a vaccine. This is essential because we have to be prudent at least about expecting massive improvements in growth and job creation. Second, the US elections. Investment banks and analysts tend to believe that the change of president in the United States is going to make a radical impact on the economy and that they're going to make huge changes that will lead to a massive difference relative to the previous president. Let's think about reality. If we look at the, for example, idea that many people are talking about the end of protectionism, we must remember that between 2009 and 2016, with Joe Biden as vice president, the United States implemented more protectionist measures than any other country in the world. We also must remember that there were tariffs on solar panels from China, there were tariffs against Chinese products, and that there were also limits to the movement of capital from China into the United States. All of those things happened with a Democratic tenure. However, we also have to talk about the perception from some people that there's going to be a massive boom in renewables. Because this has already happened. It's already happening. And there's not going to be a new Green Deal. The reality of a split government with a very tiny majority in the House and with no majority in the Senate, a divided government also proves that it's going to be very difficult to pass the legislation that implements the radical tax increases, because that would basically put at risk the stimulus package, and the new Green Deal, because it's not about the federal government, it is more about the states. And those two things added to the idea that the government is going to completely change its policies relative to global trade are informing views of investors that may be misguided. If we look at the Obama tenure with Joe Biden as vice president, the dollar strengthened. Renewables did very little. The reality is that technology giants and the S&P 500 rose significantly more than the European markets or emerging markets, let alone the Chinese market. So in reality, the calls for a bet against the dollar and into the European economy and into the emerging market economies are misguided and predicated on the idea that the changes of policy are going to change long-term trends that actually are unstoppable. Therefore, we need to be simply optimistic but prudent, both with the vaccine and with the idea that there's going to be a complete overhaul of the market and economic trends that we have seen in the past decade. Because it's not about the president and it's not about the political landscape. It is about technology, demographics, and debt. And none of those are going to change. Thank you so much.